That is the exact amount of silver, in ounces, that the world has consumed more than it has mined since 2021. It is the hole the banks don't want you to see. The barrier has fallen. For 5 years, the global banking cartel drew a line in the sand at $50. They defended it with paper contracts. They defended it with margin hikes. They defended it with media blackouts. But 3 days ago, on December 6, 2025, that line didn't just break, it evaporated. Silver crossed $59, and as I speak to you today, Tuesday, December 9th, we are watching something that hasn't happened in 45 years. We are watching price discovery. The mainstream financial press is confused. They're telling you this is a speculative overshoot. They're telling you to take profits because the RSI is overbought. They're telling you that $59 is expensive. They are wrong. $59 isn't the top. $59 is the floor, because what the charts don't show you, and what JP Morgan won't tell you, is that the mechanism keeping silver cheap wasn't just paper manipulation. It was a physical buffer, a stockpile of surface inventory that the world has been eating into since 2021. I have run the numbers. I have tracked the deficits from the Silver Institute. I have tracked the drain from the LBMA and the record imports into India. And the math is terrifying. Since 2021, the world has consumed 1.1 billion ounces more than it has mined. Let that number sink in. 1.1 billion. That is equivalent to erasing every single silver mine in Mexico, Peru, and China for an entire year. It is gone, burned up in solar panels, buried in landfills, locked in private vaults in Mumbai. That 1.1 billion ounce buffer is what allowed the banks to suppress the price. It was the slush fund they used to fill the gaps. But as of this month, the slush fund is empty. In the next 20 minutes, I'm going to walk you through the vacuum effect. I am going to show you why there is zero technical resistance between $59 and $100. I am going to prove to you that the solar vortex has made demand completely inelastic. And I am going to show you why the Indian whale bought the bottom while the West was selling the top. The deficit is real, the vaults are empty, and the vacuum is open. This is the story of the 1.1 billion ounces that vanished and why they are taking the dollar down with them. Let's start with the math, because to understand where we are going to $100 and beyond, you have to understand the hole we just dug. For most of the 2010s, the silver market was in a surplus. Miners dug it up, industries used it, and there was usually a little bit left over. That leftover silver sat in vaults. It sat in London. It sat in New York. It kept prices boring. Then came 2021, the year the world changed. In 2021, the deficit started small, but by 2022, it exploded. The Silver Institute reported a deficit of 237.7 million ounces. In 2023, another 140 million ounces. In 2024, the deficit widened again to 215.3 million ounces. And now, as we close the books on 2025, early projections show we have burned through another 200 million ounces. Add that up, since the start of this decade, we have run a cumulative structural deficit of nearly 800 million ounces. But wait, that's just the reported deficit. That doesn't account for the investment drain. The silver pulled out of ETFs and moved into private storage. When you add the drain from the LBMA vaults, which plummeted 30% from their 2021 peak, when you add the retail stacking frenzy, the real number isn't 800 million. It is over 1.1 billion ounces. Think about what that means. The entire global mining industry produces about 830 million ounces a year. That means for the last 5 years, we have been short more than an entire year's worth of global production. Where did the extra silver come from? It came from the ghost inventory. It came from the billions of ounces sitting in London vaults, legacy stockpiles from the 1990s, and government hoards. We have been cannibalizing our savings account to pay our daily bills, and the banking cartel loved it. As long as there was ghost silver to bleed into the market, they could point to the vaults and say, "See, plenty of metal. No shortage here," but math is undefeated. You cannot run a deficit forever. Eventually, the savings account hits zero. That is what happened this week. That is why we broke $59. The ghost silver is gone. The LBMA float, the metal actually available for lease is effectively zero. The COMEX registered inventory is down to fumes. Now, every new solar panel, every new cruise missile, every new iPhone has to be built with silver that was mined yesterday. There is no buffer, there is no slush fund. And when you have a market with inelastic demand that must be met regardless of price and you remove the supply buffer, price doesn't adjust linearly. It goes vertical. The 1.1 billion ounces didn't just vanish. They were the anchor holding the balloon down, and the rope just snapped. But wait, the skeptics say, if silver hits $60 or $80, surely demand will crash. Solar manufacturers will switch to copper, they'll use less silver. This is the single biggest lie on Wall Street right now. And I'm going to destroy it with one acronym, TOPCon. For years, the solar industry used a technology called PERC. It was efficient enough and it used about 10 milligrams of silver per watt. But PERC hit a wall, it couldn't get any more efficient. And in the energy game, efficiency is everything, so the industry pivoted. In 2023 and 2024, the entire global manufacturing base shifted to TOPCon and HJT cells. Here's the problem, TOPCon doesn't use 10 milligrams of silver. It uses 13, HJT uses 22. We are moving toward more silver, not away from it.
Why can't they switch to copper? They tried. Oh, how they tried. Copper oxidizes, it corrodes. It kills the lifespan of the panel. When you are selling a solar farm with a 25-year warranty, you cannot use a metal that rusts in 5 years. You need silver, and here is the economics of the solar vortex. Let's say a solar panel costs $200 to manufacture. At $25 silver, the silver inside that panel cost about $15. That's 7.5% of the cost. Now look at today, silver is $59. That silver now costs roughly $35. Does the manufacturer stop making the panel? No. Does the government cancel the solar mandate? No. They just raised the price of the panel from $200 to $220. The demand for silver in solar is inelastic. A 100% increase in the price of silver only increases the cost of the final product by 10%. This gives silver pricing power that almost no other commodity has. If oil doubles, you drive less, demand destruction. If silver doubles, Samsung and First Solar keep buying. They have no choice, and remember the deficit we talked about. In 2023, solar consumed 193 million ounces. In 2024, it was over 230 million. By 2030, the University of New South Wales Project Solar could consume 85% to 98% of global silver reserves, not annual production reserves. The silver still in the ground. We are strip mining the planet to go green, and we have run out of the easy metal. So when you see silver at $59, don't think expensive, think necessary. The industrial buyers aren't looking at the price chart. They are looking at their production schedules. And they are terrified. They are the ones buying right now. They aren't buying paper contracts on the COMEX. They are calling refineries directly and saying, "We will take everything you have. Name your price." That is why the spot price is leading the futures price. The physical market is screaming. If you want to know who won this game, don't look at Wall Street, look at India. While Western investors were dumping their silver ETFs in 2023 and early 2024, India was doing something unprecedented. They were draining the West. Look at February 2024, a date that will go down in history as the beginning of the end for the London vaults. In that single month, India imported 2,295 metric tons of silver. Let me put that in perspective for you. 2,295 tons is roughly 73 million ounces. The United States Mint produces about 20 million silver eagles a year. India bought 3.5 years of total U.S. mint production in 28 days. Why? Because the Indian whales saw the deficit coming. They saw the 1.1 billion ounce hole before we did. They knew that the solar factories being built in Gujarat would need massive amounts of paste. They knew that the Gift City exchange was opening up to challenge the West, so they bought the bottom. They bought when silver was $22. They bought when it was $24. They cleaned out the London vaults while the LBMA was asleep at the wheel. And now that silver is $59, you might think, oh, India will sell. They'll take profits. No, because in India, silver isn't a trade, it's wealth. It's the poor man's gold, but it's also the rich man's industrial input. The silver that went into India isn't coming back. It has been turned into jewelry, or it has been consumed in electronics factories. It has left the free float. This is the key to the 1.1 billion ounce narrative. That silver didn't just vanish into thin air. It moved from weak hands to strong hands. The West is now waking up to a shortage, realizing they sold their insurance policy to the East for pennies on the dollar. JP Morgan knows this. They track the flows. They saw the 73 million ounces leave in February 2024. They saw the thousands of tons leave throughout 2025. Why do you think they stopped shorting? Why do you think the tamp down stopped working? Because you can't spoof a market that has no metal. You can't flash crash the price when India is standing there with a bucket ready to buy every single dip. The Indian whale broke the back of the short sellers. And now the West has to pay the price to get any metal back. So here we are, December 9th, 2025, $59. What happens next? We enter the vacuum. In technical analysis, resistance is created by people waiting to sell. If you bought silver at $30 5 years ago, maybe you sell at $30 to break even. That creates resistance. But who bought silver at $65? Who bought silver at $75? Who bought silver at $85? Nobody. There is no overhead supply. There are no bag holders waiting to get out. This means that technically the sky is clear. This is what we call a blue sky breakout. When an asset clears its all-time highs, it enters a phase where the only way to find a seller is to bid the price up. But there's another target, a target that the 1.1 billion ounce deficit points to directly. $100. Why $100? Is it just a round number? No. If you adjust the 1980 high of $50 for inflation using the government's own rigged CPI numbers, that $50 is worth roughly $170 today. So at $59, silver is still historically cheap. It is still 60% below its real all-time high. But psychologically, $100 is the magnet. The vacuum effect works like this. First, the shorts cover. The hedge funds that are still short have to buy to close. They don't care about price. They care about survival. Second, the FOMO, the retail public, who ignored silver at $25, sees $60 on the news. They rush in. Third, the industry panic. This is the big one. When Tesla and Samsung realize the 1.1 billion ounce buffer is gone, they stop buying just in time. They start buying just in case. They hoard. Hoarding creates scarcity. Scarcity creates higher prices. Higher prices create more hoarding. It is a feedback loop from hell for the banks and a feedback loop from heaven for physical owners. The 1.1 billion ounces that vanished created the conditions for this vacuum. And nature abhors a vacuum. Price will rush in to fill it. I believe we will see a rapid move from $59 to $75 before the end of the year. And $100 is not a 2030 target. It is a 2026 target. The 1.1 billion ounce deficit wasn't an accident. It was a transfer of wealth. It was a transfer from the impatient to the patient. From the paper believers to the physical realists, from the West to the East. For 5 years, the data was screaming. The Silver Institute reports were public. The LBMA vault data was public. The India import numbers were public. Everyone had the chance to see the whole forming. Everyone had the chance to buy silver at $22, at $25, at $30, but they listened to the TV. They listened to the banks. Now the buffer is gone. The line at $59 is broken. And the vacuum is pulling us higher. If you're watching this and you still hold paper, unallocated accounts, SLV, pool allocated, you're standing in a burning building hoping the fire insurance company is solvent. Get the metal if you can still find it, because the 1.1 billion ounces that vanished are never coming back. And the next billion ounces, they are going to cost a hell of a lot more than $59. The squeeze is incoming. The squeeze is here. I'll see you at $99. Subscribe.